It's Larry Gonzalez with your Monday rate update. I told you last week that this was going to be a crazy week. Last week was going to be a crazy week with jobs week and the Fed meeting. And you know what? It was even crazier than I thought it would be. And on Friday, we had the jobs report come out. It was way worse than what was expected across the board. Fewer new jobs reported, and unemployment going from 4.1 to 4.3%. And the expectation was we would stay at 4.1%. And that really sent interest rates down. They fell off the cliff. And this is something I didn't want to see necessarily. I'm all about steady, gradual drop in interest rates, and that didn't happen. And now this week, it's a new week. There's not a lot of economic news this week, but we are still going to deal with the repercussions of what happened last week. All right. And matter of fact, as I'm talking to you about the rates for the week, the Japanese stock market is getting hammered. And now we're not just talking about fears of a U.S. recession, but we're talking about possibly a global recession. And maybe because the Fed has taken so long to act, this is going to send the world economies into a tailspin. So what does that mean this week? Let's look at what economic news we have on the front. There's not a lot. This is the calm before the storm, which is the inflation reports that we get the next week. All right, this week we have a non-manufacturing report that comes out on Monday. And then the Reserve Bank of Australia, they're going to make their decision on their Fed funds equivalent rate. We also have a 3-year Treasury note auction. And then on Wednesday is probably the biggest day of the week as far as economic news. We're going to get the consumer credit change report that comes out on Wednesday. In addition to that, we'll also have a 10-year Treasury auction. And then Thursday, the only other news we have for the week is the initial and the continuing job loss claims. So not a lot of economic news on the front going into this week. I think we're still going to be dealing with the after effects of the jobs week last week and the BLS jobs report that came out on Friday. So what happened to interest rates last week? All right, and where are we starting on Monday? Monday, the 30-year fixed rate conventional mortgage. This is averages across the country, by the way. It's not my race necessarily. All right, 6.4% for conventional 30-year fixed. 30-year fixed jumbo is 6.68% as we start on Monday. And VA, we're at about 6.12. So we're right in that channel between 6 and 6.25% for VA. This is across the country. Now, I will tell you this. The rates that I'm showing to my clients who are refinancing right now are between 5 and 5.5%, depending on their credit score. Rates have come down a lot on refinances, and purchases are in the mid-5s with my company right now. So we're seeing a huge drop off from what we were seeing, about a 0.5 point differential from what we were seeing the week before. So certainly good news for people who are in the market to buy and people who have bought really in the last 2 years, and anybody who has an interest rate above 6%. Right now is an opportunity to refinance. And like I said, we're going to deal with the after effects of last week's jobs report and the Fed not dropping the Fed funds rate. But we don't have that crystal ball. And if you're going to drop your interest rate by a point to a 1.5, I don't think I would wait, because I think in that case you're getting greedy. And if rates do go back up, guess what? You're going to miss out. And you know what? If rates go down, well, then just know that you're going to refinance again later. All right. It's an old school saying. All right. Value the bird in hand versus the two in the bush. All right. We know where we're at right now. We know where we're at. Don't get greedy. Be excited for it. And you know what? If things get better, awesome. If they get worse, hey, you're safe because you made the decision to lock or to go buy right now. That's all I have for you this week. Stay tuned. We are in for a wild ride for the rest of the year. Stay tuned. Stay positive. Have a great week.